Hey, good morning.
There are too many of you out there hiding behind excuses, waiting for the perfect conditions, thinking that someone owes you something. Let me tell you right now, the world doesn't owe you a damn thing. You want to be hard. You want to be unbreakable. Then you better get used to pain, discomfort, and a whole lot of hard work. First, you need to embrace pain and discomfort. You think success is easy? You think being tough is just about looking good or talking the talk? No, it's about grinding through the hard stuff, pushing through when you want to quit, and learning to thrive in the discomfort. Pain isn't something to avoid, it's a tool. You want to build strength, you've got to lift heavy weight. You want to build character, you've got to go through the fire. The hard times don't destroy you, they forge you. If you're not willing to get uncomfortable, to hurt, to face adversity head on, then you're not ready for the level of success you say you want. Now, stop with the excuses. Take full responsibility for your life. Your circumstances, your failures, your lack of progress, they're all on you. The moment you stop blaming your parents, your past, your circumstances, or anyone else for your situation is the moment you start taking control. You are the captain of your ship. Your actions determine your future. No one else is coming to save you. You're not a victim, you're a player. And winners never make excuses. Winners look in the mirror and own their life. You want to be hard? Then own every mistake, every failure, every bad decision, and turn it into something that pushes you forward. Next, let's talk about self-discipline and relentless work ethic. There is no substitute for putting in the work. There are no shortcuts to greatness. It's all about consistency, sacrifice, and doing what others won't do when you get up at 4 a.m. While the world sleeps, when you keep grinding long after others have quit. That's when you build the kind of character that can't be shaken. Hard work doesn't care about your feelings. It doesn't care if you're tired, sick, or frustrated. If you want to be hard, you need to commit to doing the work day in and day out, no matter how you feel. The hustle doesn't stop, and neither should you. And finally, you've got to develop unshakable confidence and mental toughness. The world will try to break you. People will doubt you, question your abilities, and try to knock you down. But here's the thing, you are unbreakable. You've got to build that kind of mental toughness where nothing, no criticism, no failure, no hardship can move you off your course. Confidence isn't about arrogance, it's about knowing your worth, trusting your process, and not letting the outside world dictate your value. When you're mentally tough, you don't run from problems, you run towards them. You tackle them head on because you know that on the other side of adversity lies your growth. The world will test you, but if you're mentally tough, you'll pass every test and come out stronger. So let me ask you, are you ready to be hard? Are you ready to embrace the discomfort, take responsibility, work your ass off, and develop the mental toughness to overcome anything that comes your way?
Hello, everybody. Good morning.
Good morning.
Good morning, guys.
I love these little speeches in the morning, motivational stuff. I'm in the car line, and my son, he even loves it. He's listening to it.
That's so good. You know, our kids will get used to those too. So, guys, good morning, guys.
Yeah.
All right, let's see here. It's 9:01. Wow. Okay, so early start. Guys, what is up with all this AI? Like, I'm clicking like, AI notes, AI notes, AI notes. It's like everybody has AI notes there.
That's it. Their assistant taking notes.
There should be, I think we have double the numbers because of AI notes.
Not me. I have my notebook.
See?
Oh, cool.
Good morning, Carrie. You had a haircut, huh? Your hair is shorter.
I did. I got a little taken off yesterday. Just a little. It's okay. Because I had it short. It was really long, and then I got it shorter, and now I'm growing it back, and it all grows.
Just for the season. For the season changes.
Thank you for noticing, though.
How's everybody doing? Can you guys, how's your week been? How's the holiday next week? Is everybody excited? What's going on, Atlanta?
Oh my gosh, it's already Thanksgiving? That's crazy.
Yeah, it's next
Crazy.
week.
Wow.
Next
Wow.
week.
Christmas is only a month away.
Oh my gosh. So one more month until the end of the year, guys. Oh my goodness, that's crazy. Time flies. Time flies. Well, guys, good morning, Atlanta. We're gonna allow everyone else to come in, guys. So just a few more minutes here.
You have to start saying good morning, Georgia.
Good. Oh, you're right.
Oh,
Good
you
morning,
are, yeah.
Georgia. Good morning, South. The South.
Yeah, there you go.
Guys, we are planning in January. We're planning a PACE meetup in January. So I guess we should have a flyer out and that coming out soon. So Aspire is going to be January. I don't even know the dates, guys. I'm terrible with dates, but it's going to be January 8th or something like that. So PACE will be and we will host a PACE meetup in January.
I think it's first week, maybe like 5th or 7th. Where's Heather? Is
Eight,
she
I know.
Grizzard?
Who's our organizer there?
Heather Grizzard, is she here?
No, I know.
No. Yeah, but can I make another announcement since, we're waiting for everybody to come in? Some of you guys know we're doing the goal setting, me, Pat and I. We're doing a workshop for goal setting for 2025. So if you guys are interested in coming in, it's going to be amazing. We're going to be working on our goals together. And if you guys feel like I felt this way about 2 years ago, like I had my goals, but I wasn't getting anywhere, like where I wanted to be, I start applying this techniques, following this method, and it really changed my life, not only career, but as my personal self, my growth, business growth, and everything else. So if you guys are there, if you want to change, if you say like, okay, I want to see how 2025 can be different from 2024, this goal setting is for you. So, and I'll put the Google so I can get you guys information, because there's going to be some forms that you guys are going to print, because it's going to be work. We scheduled for 2 hours. It's going to be first week in December 7th. And we're going to be working for 2 hours, maybe a little bit more. My first one was 8 hours, guys. This is intense.
Wow.
It's amazing. It really shifts your mindset about goal setting and, really doing the work to have that clarity and focus. I'll put it here. If you guys that have not signed up, if you're interested, just fill out the form.
Guys, the goal setting thing it's so important. It is so important, because it's not only about setting goals. Because I thought, like, before Chris and I did this, I thought it was just about I set my goals. Okay, New Year resolution, set goals. But this is a framework. Like, it gives you so much details that digs deep into your life, into your into your mind, into your goals. So it's important that you want to improve yourself, right? The different versions of your life there, and when you see it, it's eye-opening. It's really eye-opening, because that's what helped us in terms of our our real estate career and kind of how we've changed, and also the growth path. There was a time where we were very successful as small business entrepreneurs, and then as things change, converting and getting out of that old version of ourselves was hard. It was very, very hard, and this framework really helped us out. Like, it's amazing. Like, if anything, guys, improve yourself, invest in yourself, educate yourself, make yourself better. It's not anything that we're asking for you guys, but it's important. At least for it, it changed me. So yeah.
Pat, let me ask you a question. Is that date set in stone?
For December?
Yeah.
Yes. Why, Peter?
There's a real estate conference that a lot of people are going to be at, more than likely, on the 6th and the 7th. It's a 2-day event.
Here in Atlanta?
Yeah.
I think I know which one you're talking about. I'm bad with calendars and dates, but I think I know which one you're talking about.
Yeah.
So we
Change.
can.
But anyway, there's a lot of people are going to be, maybe not from this community specifically, but anyway, no, I'm not suggesting you change it. It's just a thought, if it's at all possible.
I know December is so busy, I know from my schedule, it's going to be impossible. And we have the Saturday that we have the most time, at least for me, like I can spend 2 hours, 3 hours on a workshop.
Chris?
Say it again.
What time are you doing it?
11 a.m.
And is it virtual or in person?
Yeah, virtual. I'll send you guys the link. I'm gonna send you guys the forms, and we're gonna be working together. I want to do the same thing that the first time that I found out, and I have this workshop. Like, we were there for hours, and I told you guys I did with Brenda Turner, Better Life people. Seriously, beforehand he said, do not book anything for that afternoon because we're gonna spend hours doing that. And I went in because I really wanted to see. I was curious. I was like, oh, I need some change. I need to pivot it, and I need to get that new identity. And I remember Pat and I, we got babysitters. We from 1 to 8, like for 6 hours. Yes. But it's going to give you guys a really, for a couple of hours, to give you guys just everything. And then it doesn't stop there. We did the work the entire year. And, like, it's amazing. So, yes. So, who do we have here today, Pat?
Pat muted himself.
Pat,
You
I
muted
think
yourself,
you're
Pat.
muted. Yeah.
Sorry, guys. Sorry. Okay,
I could still hear you though, but
so today we have Quentin from PadSplit. So we have PadSplit, just for you guys that are either new to it or just thinking about it. And it's co-living, it's affordable housing. It is the thing now that as we get into this new universe that we're in, a new economy that we're in, it's like it's two extremes, right? Affordable housing is so important. Everybody needs it. The government's not doing enough to do anything about it. So that's kind of the new phase now. So for you guys that are investors, guys, it's a great method, So all right.
Can I just say, just say a little bit. I met Quentin. I met him, a couple of months ago, and he's been great. As you guys know, we went live our first PadSplit a couple of weeks ago. It's so exciting, and I keep talking with Quentin. He has more stuff to teach me, and like yesterday we had probably, I don't know, like a 30-minute talk because Pat and I had a property that we're looking to. So we were talking about it, say, last minute, let's have you in our Zoom. We've been talking about it, and he was open for that time. Thank you so much, Quentin. And he's going to have more things to tell us, and it's not going to end here. He's giving more stuff to us as from our Zoom for our community. So it's amazing. Thank you, Quentin, and take it away.
Sure. I saw Garrett has his hand up. I didn't know if you had a question or a statement there.
Garrett.
Yeah, I read the other day that the city of Atlanta is going to revamp their single family zoning codes to allow for ADU units. So that's going to be huge because somebody that buys a house and wants to build an ADU on the back of it for rent, they'll have somebody paying half of their rent money or half of their mortgage. So that's going to create affordable housing.
Can I just tell you guys, because I know we as investors, we're like, oh, blue states, red states. But there's one thing with Democrats, they will, they're already doing a lot of stuff to allow co-living to be a lot of their states. They're making it very easy. And I know in Atlanta, they're really going to push for that because it's affordability, guys. So I only see things, like all the politicians and everything going to our direction. So I see a very good future.
All right. Thank you so much for inviting me. My name is Quentin Went. I am the general manager here in Atlanta for PadSplit. It's funny. I looked around and I see some familiar faces. I see you, Ronnie. The beauty of communities, as I participate in a lot of different communities. It's proximity. It is the idea of constantly learning, and that's why I'm here. I'm not here to necessarily proselytize about PadSplit. It's just more informative than anything else. You guys, as individual real estate investors, we are just one of many tools that should be in your real estate tool belt. Some people we're not a really good fit for because the operations of what we do and the mechanism in which we have to participate in, people don't want to be hands-on or they choose a different path, and that's okay. We're just here to just kind of let more people know, across the country. When I joined the company, it was like 2.5 years ago. We had all of 3,600 doors all over the country. We have 15,000 now. So there was a lot of different things that kind of fed into that. Interest rates was a thing, affordability was a thing, inflation was a thing, but there's a ton of tailwinds on our behalf. So what I wanted to spend the time with here was just a quick introduction on what it is that PadSplit is for those that don't know. But mostly I wanted to block off a good amount of time for whatever reservations, questions, rumors, thoughts that you guys had in terms of reservations. I wanted to address those pretty straight on and give you a straight answer. But we'll jump right in. I shared some stuff with Christiana and Pat, and I'll jump into a quick slideshow if that's okay. If we can, if not, then we'll just talk straight through it. It's no biggie. Okay.
Are you able to do it, Quentin?
Yes, sir.
Okay, perfect.
And let's see if that's the one that I want. Okay. I'm going to run through this really quickly. I hope that I'm not duplicating a lot of stuff that folks know. PadSplit, what it is we are the nation's largest co-living digital platform. Simply put, we allow real estate investors.
Hey, Quentin, I'm sorry, Quentin.
Yeah.
I see a white and a black line. It's not popping up. Is everyone else seeing the same thing?
Ooh.
Yes.
On the screen share there.
Yeah, I'm not sure.
See, there's a glitch. There you go.
Work?
Perfect. Okay. All right.
Is that better?
Yep,
okay.
It works now.
I use Google Meet. I see Zoom. It's kind of trying to navigate in between all of these things that are different. One of the things that is I'll put this out here while I kind of just talk through what we're talking about. This is a referral code for you to create your own host account. It ties back to Pat and Chris. It's just how we do kind of attribution for where your leads came from, so we understand kind of which communities participate and what's effective. But going into what PadSplit is the nation's largest digital platform. It's very similar to Airbnb. I'll use other things that people talk about just to kind of to frame what it is that we do. As a digital marketplace, we're a two-sided marketplace where the real estate investors, they go and acquire properties, convert them into single room occupancy. SRO is a term that people use. In our world, we call it co-living. But the commodity they would trade in is essentially fully furnished, all utilities included rooms in a house. Most folks, they'll start with whatever the normal stock is in terms of affordability for the investor's perspective. We allow for, our platform allows for a single investor that was typically a long-term investor. That's typically the group that works with us the most. Is if I bought a house that's a 3.2, 1,500 in the correct neighborhood with correct parking and all these other nuanced things that the business of operating a co-living platform or a co-living house, it's conducive to. Turning underutilized space, so a dining room or a living room, into a bedroom. Each one of those bedrooms has a price tag to it. We rent by the week, and I'll get into kind of what the membership agreements and leases look like. But our members, the other side of the marketplace, the renters, the revenue, they rent by the week. So $200 a week for all utilities included, furniture included, room in a house times 6 or 7. Your top line gross is at 100% occupancy, $5,600 for 7 bedrooms, compared to what you would yield for a long-term rental, which would be $2,000. And in that spread, you're covering utilities and your mortgage and everything else. So net, if we were to compare apples to apples, a $200 net income for a long-term rental, then you kind of look at somewhere between $1,000 to $1,500 or more. That's your target number. All of it is, as we know, tied back into the universal laws of real estate. You make your money on the acquisition. And I wanted to spend a lot of time talking about that because the idea of what PadSplit is fundamentally pretty simple. But then when you get into the nuances, and you can talk to Ronnie, it's about finding the right property. Like that's the juice, right? That is the niche part of where our ecosystem works. And your community, if you are investors and you're acquiring, or if you are a wholesaler and looking for deals for active income, both, like, we have an ecosystem, which is actually really cool, is that we talk about the end product, but we don't spend enough time talking about all these different players that make money in our ecosystem. And very much like what Pace talks about is like, there's money for transaction coordinators and PMLs and PC, like everybody has a role. And once you understand our business model, you can kind of figure out where to apply your individual skills that you currently have to make active income. And then if you ultimately want to become an investor, you keep the cherry properties and then you become an operator. And then all of a sudden your acquisition turns into a hold. What we've seen over the last couple of years, Cristiano's talking about Brandon Turner. So he's a friend of mine and we talk about this all the time. Tarl Yarber, all these influencers you talk about, they all wish they had held every single property that they had wholesaled or every property they had fixed and flipped, right? It's like, if you understand the financing piece of it and reverse engineer it, our product allows you to build a portfolio rather quickly and build wealth by leveraging your dollars to keep it moving, because we're making so much more dollars per each individual property. So let me just kind of jump in here, and I'm going to go to a quick slide that kind of jumps into what it is that we're looking for as a product. So across the country, I'll stop, and I know we're Atlanta based, but I just wanted to show this idea. Is like, we started in Atlanta 2018, and we're going on 6 years, and we've crossed over 20 different cities across the country, which are considered core markets. Essentially, the product need is everywhere. If you think about what average market rates are for a rental in Atlanta, it's like $1,800 if I wanted to rent an apartment complex or a rent into an apartment. Who can afford to move into as a single employee into an $1,800 apartment, $1,500 apartment? Because of inflation and everything else, the rate of what you make, $15, $18, $20, $25 a year or an hour, the barrier of entry to get into an apartment complex is really high. But the rate of what people are getting paid and taking home isn't keeping up and keeping pace. So the niche that we're solving for is essentially workforce housing. So $65,000, $70,000 and less. We give them a transitionary place to find safe, affordable housing that's fully furnished. And then it affords them the opportunity, and the value to them is they can save $600 to $800 a month of their housing costs if they stay in a PadSplit. The trade-off is you're living with 4, 5, 6 other people. And if the value proposition is high enough, then people stay.
Quentin, can I add something real quick, just from a dialogue standpoint? Because what I see out there as a landlord, right? What I see out there is that driving around Atlanta, I'm in the city of Atlanta, I see like a dozen, if not more, new apartment complexes that are being built, right? And I know there's some people that look into more multifamily. But what is the basis of multifamily? Multifamily is like, let me renovate this, let me add a pool, let me make it nicer, let me add these amenities, right? But as you do that, the price of multi like apartment complexes, they're getting fancier, they're getting more expensive, right? I see this as we're the anti-hero of multifamily, right? Like just making it still more affordable, but not on the voucher, not on the Section 8 side of it, where people can still get in. Because I think anybody who does multifamily, they're going to go. They're going to rehab. They're going to renovate. They're going to add all the amenities, but also increase the price. And that's just the way it's going to go. It's not going to change. That's the business model of multifamily. So I think I see this anti-hero part, and I see a lot of value in it. Is that true?
Yeah, I agree with you that in the multifamily, the way that you make money is increasing cap rate, right? And essentially it's value add. So the multifamily investors that are not getting capital calls and they're not getting hammered right now is you go into a complex where everybody's paying $600. You refresh the cabinets, you refresh the kitchens, you refresh the bathrooms, and boom, That's a $1,200 apartment now. The problem is the person that was renting it isn't making a third more to go along with that apartment complex. So what happened to the person that was paying $1,000? Where are they going? Right. So to your point, our model uses that same idea, is that we're getting multifamily returns from a single family asset. And like for real estate investors, it's really the simplest way to put it. All the acquisition that you see in the left, the before, so you're buying a 3 or 4 bedroom house, all the financing components are the same. Your appraisal is going to be the same. Your 30-year mortgage is the same. All of those things are essentially the same. After the conversion process, now you have 6 or 7 different streams of income for the same exact property, but your financing stayed the same. So my 30-year mortgage on my PadSplit is just under $1,900, right? But my yield on that house, I was going to rent it. I could rent it market rate rent at $1,800 or $2,000 is the kind of the top end of what I was looking at Forest Park. But my house has 6 bedrooms. It's a big old house. My thesis is a little bit different on how I invest. I'm not trying to maximize the house for bedrooms. I walked my property with a GC and he's like, "Oh, this is great. It's 3,600 square feet. We can make this a 12 bedroom." Wanted to punch him in the nose. And I was like, that's not what I want to put out there as an investor. I want to put on, level below Airbnb where the member likes it. They get good value out of it. There's 6 people. There's a good community. I screen really well for the type of people that I want to live in there. They have to be the right mindset to live with 6 other people that they don't know or 5 other people that they don't know, but the tenure is longer, right? So the first 5 people that have moved in, I'm going on 3 months. Nobody's has moved out. They've all, asked, they have feedback to me as the operator in terms of like, hey, this is the kind of community that we're building. So can we screen for more people like that? We want peace. We want quiet. We want safety. We don't want 22-year-old knucklehead smoking weed with his buddies, at the house. So it was like, okay, that's, to me, I can screen for members and kind of create that environment. So we're getting into a little bit of nuts and bolts, but I wanted to just kind of talk through what we're looking for, because in your community, I think acquisition is a really big part of what Sub2 is doing. They're looking at it creatively. They're looking at it from a wholesaling perspective. And the investor side, I want you to understand what our platform actually is. And if you're more interested, this is the what we are. And I talked to Pat and Chris, and I was like, hey, we actually provide a boot camp specifically for your community if you wanted to do it. It's a 4-week boot camp where it's 1-hour sessions, 4 weeks in a row, where we dive really deep into the how. So that's a different registration. We'll send that out to your community specifically. And you can sign up for that. And it's essentially just learn. It's education. And then if you want to utilize it into your investment, way that you are investing and add it into a different way, please. The thing that I do want to point out, like, Ronnie, raise your hand. Ronnie's a perfect example of what I'm talking about. He understands what the economic model is, but the number one challenge we're having is finding the properties, right? That's the skill that you can learn. And for anybody that's in this space, we have roughly 2,000 people that come to our website and our site and raise their hand and say, I want to make that much. I want to try to do a co-living property. Then the problem is, how do we find properties for them? So we do
Quentin, before you move on, can I have people can you guys put one on a chat? What is your biggest challenge when it comes to PadSplit, right?
Yep.
If it is the acquisition, can you put one on a chat so we know where you guys, the biggest pain for you guys is, like, you don't know how to spot a good PadSplit location, where you guys at? Can you put one if it's acquisition? Is everybody in the Zoom here today interested in PadSplit? Like, you guys want to know about co-living, and how many of you guys have done it? I just want to get you guys a little bit more engaged so we can kind of focus what we need, because it's the second time that we bring co-living specialist. And it's nice to see how we can help everybody here, because as you guys know, Pat and I, we just got our first one. I mean, I have so many questions, but it's not an acquisition, it's something else. I mean, I'm signing up for the boot camp. I'm gonna put you here for you guys to, the link and everything. But if we could know, and then we can have this next 30 minutes of his time to go over what we really need.
Yep.
Acquisition,
yes.
Yep.
And guys, sorry, Quinn.
No, you're
guys,
good.
I saw a lot of ones out there, and I saw a few people say zoning. Guys, I just want to say something. You have to be creative. This is a creative environment. This is a creative community. So I know you guys put zoning out there, guys. I just want to just say, guys, there's black and white rules and laws out there, but creativity is beyond imagination. So just kind of keep that in mind. Nothing is 100%, guys. Nothing 100%. But I just want to say creativity, and we can go in more detail. Sorry, Quentin, we'll go ahead.
And
No,
if you guys, if you guys have questions, go to React, raise your hand, and we can bring you on and you can ask your question. I would love to see you guys engaging more. Okay, I'm done.
No, I think that's a great segue. Like, what PadSplit, it's a digital platform that allows members to rent by the room. And because we're the platform, we recruit the members. We spend about $300,000 per market. We spend a ton of money like letting members, and we call them members, but tenants know that a rent by the room option exists in the world. And this is our digital marketplace where they can go shop for rooms and look. And the other side of the marketplace is the supply. And that's where a lot of you guys come in, is how do I identify properties that are a good fit? We originally started, if you are familiar with Atlanta, right along essentially the 20 belt, like right through Grove Park, right through Collier Heights and all these like Adairsville, like these areas that people are really familiar with. But then all of a sudden over the years, individual entrepreneurs like yourself said, wait a minute, why does it always have to be in the city? I don't want to drive to Douglasville. I don't want to do all these things. So that the individual investors said, I think I can find properties, renovate them, and rent them where I'm making yield that is worth, the juice is worth the squeeze. And we've expanded to the entire 60, 70 mile radius from all the way up in Alatoona all the way down to Riverdale, right? And we have some folks that are down in Noonan. Like the reality for affordable housing is universal. I will address zoning in a second. Some counties hate us, and that's just the way it is, right? Like the local legislations, like for instance, when the city of East Point, they do not like us. So my suggestion to investors is don't go there, right? There's plenty of other real estate, if I look up Zillow, that I can find. The city of Atlanta, as zoning is legally written right now, single family definition is 6 unrelated people, 4 boarders, so 4 paid, and an unlimited number of domestic servants. That's the actual definition. We've argued in state court that means 10. Give me the 6 plus the 4. The city of Atlanta, Fulton County, we work with the mayor, we work with the code enforcement. They will drop a code enforcement violation on you if your lawn looks like crap, if your trash is all over the place. It's no different than you would as if you were a long-term renter, right? Like the idea that don't be a slumlord. Like, don't come to our platform to try to maximize rent, to be a slum. I don't want you. We don't want you, right? Like the members don't deserve that experience. Do the math, find 6 to 8, and I think that's one of the things that I love about what we talk about is like, find rooms in the 6 to 8 range. I have a property that I just took down. It's got 10 bedrooms in it in Stone Mountain, but it's a 3,000 square foot house that was a former senior living facility, has sprinklers involved. I don't have to deal with zoning and problems because that was already the prior use of it. But because I do a rent by the room model, that house is a good fit for maximizing revenue in that space. So, our sweet spot, we joke that it's like a Goldilocks area, is like 6 to 8 is actually a prime size because the housing stock that you're looking at in Atlanta to buy, and you can do it many different ways, but you can, my suggestion, or I think the way that makes the most sense, buy a distressed property, renovate it, refinance it, and then that spread is where you find equity and you can recycle your money and burrs But you have to understand the financing. That's the educational piece of the how. Join the boot camp, go through it, learn it. We have exercises and webinars where we'll do deal flow analysis for you and just kind of help you understand the underwriting. And that's really important, is that you understand the math. So the active income, and I'm going to stop here in the next couple of minutes. The active income for you guys is, can I get good at identifying properties? And then can I leverage our relationships with PadSplit, myself, the account executives, to pair up with investors that are looking to buy? But you have to understand what they're buying and how they're analyzing properties, so that when you're putting it out there, like, don't be a wholesaler that says, hey, here's a house that is $400,000 and then the ARV is $1.2 million. And then you look at it, you're like, the ARV is actually like $550 and it's $100,000 reno. Like, that's a bad transaction. So if you understand how our investors are underwriting the properties, it gives you more insight as to the properties to identify. That's your niche. And it doesn't cost you anything but education, right? That's how you figure out how can I get good at identifying properties, underwriting them, finding an end buyer to sell it off. That's easy. We have a list of buyers that are actively looking for properties. What ends up happening is you will come into our platform, you will fumble through your first transaction, because you have FOMO, FOBO, all the momos, right? Like, I feel like I'm missing out on something. So you buy a property, you convert it, you get it actively running, you understand the business. And then you're like, wait a minute, I made $1,500 net on a single family rental. I want to do more of these. And then that's where the deal flow becomes really active for you, the investor. I'm going to take a pause and stop for a second because I tend to yap a lot. So does anybody have any questions at this point?
Wow, the underwriting chart right there is looking good to me there. I like that.
Yeah. So like I have an underwriting spreadsheet, but on our website, there's a whole bunch of things. And the fastest, easiest way to gain access, it's all free. Go create a host account. Go back to what I was saying here, like, just follow the link, take the QR code, do whatever you need to do, take a screenshot, go create your host account, go to hosting on PadSplit, it's free. And then it unlocks all of these individual URLs and links that give you essentially our AirDNA data. And we freely share that, like density of houses, average pricing for houses, tenure of members there, what is the price per room, so that you can go back to the underwriting. What did I just do with it? So you can go back to this, fill in your numbers, and you have a real understanding of like what it looks like for the end investor. If you want to take it down yourself, hard money, cash, but however you want to acquire PMLs, you can put in average market data to get an underwriting of what that looks like. So,
Quentin,
yes, ma'am.
sorry, good morning. How are you?
Hi there.
So I have a question for you. So you were saying there's specific cities that don't allow pad splits. Do you guys have that information on your platform? So
So
when we're looking for
we,
properties, we know.
yeah, I will tell you that the easiest thing to do is you can go on our website and it gives you, there's actually a link for a heat map where it tells you density. So it's essentially, this is an internal doc. I'm not even supposed to share it, but I do because it's the easiest way for me to put it in place. I will tell you that the easiest, fastest thing to do is just go and pretend you're a member. This is Pat's profile. So Pat, let me get out of your profile so I don't have to show anybody any nonsense here. If you were acting like a member, and can you guys see my sheet here? You can see my
Yes.
screen, right? Okay.
Yes.
So if you were to go and just do this, act like a member, go to Georgia, go to Atlanta, and it shows you the map of properties and where they're available. This is my favorite tool that's available. It's right in your face. Nobody uses it the way it should be. This tells you density of where we have properties. And this only shows you the available ones, right? In Atlanta, we have like 6,300. People talk about, the market's saturated, the market's saturated. I'm at like a 91% occupancy rate across Atlanta. But this is the simplest tool. And the reason why it's really simple for real estate investors is I can go into an area and see, hey, this area here, I love College Park, I love Forest Park, I love these areas, but a lot of people choose west side of town or they prefer the east side of town. If you go into this area, you'll start seeing where the properties are located. And it's real estate. The houses that are in Venetian Hills, they're all the same, typically 3-2, 1600 houses built in 1960. Well, if everybody else who's already come before me has utilized that, then that's really the fastest way to say, hey, maybe those houses in that area work for PadSplit. And you start looking at houses there, utilizing the data that you have, and it works. You don't have to reinvent the wheel, right? Just follow the lead that so many other people prior to you have set up and start analyzing data and properties in that area. One of the tools that exercises that I ask a lot of realtors when I train with them is go find our existing houses, go into MLS, go into PropStream, and you can see what they bought it for, right? And then you start doing the reverse engineering on the financing. And you're like, this house that's a 4.3 in Stone Mountain will turn into an 8.4. So the 3.5 turns into an 8.4. And it's close to where others are, and they're successful. So that area works, right? Like you don't have to come to me and say, hey, for example, yesterday, my man Pat's like, I got this great deal in Dallas, Georgia. And I was like, Dallas, Georgia is really far away, and we don't have a lot of supply out there. So I can't give you real market data, which is essentially, as a real estate investor, all we really want is give me previous data that I can underwrite for and have a worst case and best case scenario. So I'm going to stop and just kind of, I don't want to blab the whole time. So I'm going to take a pause and any questions that you have, concerns, anything that you wanted to ask about.
What about Cobb County?
Cobb County depends, right? So I'll give you an example. Kennesaw State, when Kennesaw State was built, Brassfield Gorman had like $1 billion contract with Kennesaw State to build student housing. One of the caveats that they passed was that they had city council change zoning. So it's a maximum of 2 unrelated people that live in single families. So they actually changed zoning. So it forced everybody who was living off campus to get into the dormitories that they built. That's how zoning is used at the local level, right? It's a chip that they use for development. Cobb County is different, whether you're in Kennesaw, whether you're in Ackworth, whether you're in Mableton, it's all different. So if you're looking for somebody to give you a permit to say, hey, go do PadSplit, it's not coming, right? I don't know how else to be comfortable and say that. Like what we essentially do is new, very similar to Airbnb and very similar to Uber, is that the ones that are egregious, for example, we had a house in Lawrenceville, and this host, he was Airbnb-ing it. He got a citation for Airbnb because it's in a neighborhood of like McMansions in an HOA. He turned it into an 11-bedroom. He heard that we have like a legal support for it, didn't tell anybody that he had already had Airbnb problems, brought it onto our platform, and it was a mess. It was just a mess. The neighborhood across the street had a big jungle gym. The lady drives a Mercedes. The guy next door had a big ass Tahoe. Like they brought the news people to sit on the front lawn and be like, what the hell's going on here? And now we have to deal with the fallout for all that nonsense. We should have said no, right? So it's a failure on us and our sales team to be like, no. But in reality, like that host, this is where I kind of come back around to pigs get fed and hogs get slaughtered, right? Like you have to find rinse and repeatable models where you build a portfolio. 6 to 8 is kind of our Goldilocks place where the numbers make sense, where you can just build a portfolio in neighborhoods that work. The biggest things that people don't talk about is like the nuance pieces about parking, public sewer. So you know who's got great houses? Lilburn, Tucker, and Norcross. But you know what the problem is? A lot of those houses are on septic. So if a house is engineered for 4 bedrooms, that's what the septic tank is. So for us to try to put 8, 9 people in a house that are flushing the toilet all the time, they're like, oh, the leach field doesn't work. We told you this, right? But you wanted to force in a square peg into a circle hole, oink, oink. And that's the fallout, is that now you've got backed up toilets that ruin the members' experience. They want to transfer out. You lose money. I just keep coming back around to, we have 1,300 investors. And because we're a marketplace, some are great operators and some are less great operators. We've got property managers that are doing a good job of operating for passive investors. There's different ways and different avatars that you can find success to replicate on our platform. So it's up to you. If you want to be an investor and your niche is acquiring great properties, converting them well, and making your money there, and then you put it off to a third-party property manager to manage, do it. I've got guys deploying $52 million out of New York, and that's all they do, is like they love the deal. And then they got essentially a turnkey team in property in Atlanta and Tampa, and that's where they acquire properties. These guys convert, and then they put it on our platform, third-party property managers, and then they hold the property managers accountable for return. That's one way. Self-managers, again, different model.
Yes.
Garrett,
and you
I
know,
see.
a lot of self-managers, they use VAs, which I think it's amazing. Like that's when, you know, my plan is to scale, but use VAs before I use a property management. Because it's something that, you know, so far, you know, it's not like an Airbnb. You're managing Airbnb. I self-manage Airbnb too, and it's, oh my goodness. It's a lot of issues, and there's a lot of more, the level of hospitality is very different. I think expectations with PadSplit, the resident coming in, it's more like I want to find a home somewhere that, you know, there's cleaners coming in, a nice environment inside the house, outside the house, right? That's what I've seen, and when I talk with people, that's what I see so far. And,
Yeah,
right?
I just want to put a caveat on that, Chris. Like, I love that idea. We have a bunch of good salespeople and they're selling. Like, I'm on the operations side, so I don't sell it in that way. Like, do not think that you're getting an autonomous driving car. I'm not selling self-driving Teslas here. I frame it this way. As the real estate investor, converting a property from a single family 3-2 into a co-living property as a 7-3. All you've done is built the opportunity within the framework of the 4 walls to make this much extra revenue. You as the operator are the ones that have to realize that revenue.
Yes.
So if you sit back and like, people will solve for themselves and all this other stuff, like, you're going to get punched in the face. And then it's up to you as an operator. You can have the best 7-3 and still not make money because you don't screen the people well. You don't create a culture in there. You don't maintain the house. Like,
it's like you don't see as a business, right? Because this is a business, right?
Yes.
It's not, if you want a passive, do long term, this is not. Like what you say about screening, and I would love to hear more, but I kind of want to focus what, you know, I know Garrett has his hand up. I would love to bring him on, and then next, Heather O'Hare, you wrote some things here. I want you to, you know, to bring you up and you know, tell us what kind of pain do you go through to find the perfect, you know, a good PadSplit.
Garrett,
right,
you have a question, sir?
Not so much a question, but a comment.
Yes,
Tyler Perry bought Fort Benning and turned it into a movie studio, and he's bringing in all sorts of people from California and all over the place. But he's the one that's paying the rent on these rooms, and then he's people in them as people come in. So the south side of Atlanta is a good place for somebody with a PadSplit to invest. Now,
yes.
Lionsgate just bought 140 acres here in Douglasville, where I am. So they're going to need probably the same thing. So although Quentin said Douglasville is not a good area, I'm going to say it's probably going to be a good area for PadSplit in the near future.
And that's what makes real estate investors because it's local. I have a guy that He only buys in White County. So if you are familiar with 85 going north, where it splits to 985, all of those distribution facilities that are built on the right-hand side of 985 going north, he looked at that and said, oh, that's an opportunity. So he just started buying single family houses up in that area and then converting them to housing. So he got the wave of construction when they were building the facility. And now he's converting over to the employees. And because, like you said, he knew where the path of progress was going, he utilized our product as the entrepreneur to say, oh, I'm going to get 6-7 bedrooms worth of housing out of this single family property. And people in our company were like, Jesus, we've never actually done anything that far north. Are you sure? Are you sure? We don't have public transportation up there. And he said, hold my beer and watch. And that's how he went about it. And now he's got a portfolio of 7 houses up there that's his methodology. He's like, he looks for Amazon warehouses. He loves Americold. So he literally understands the business of the employers because he doesn't want unemployed, broke ass people living in his house. He wants somebody that's going to be like, hey, if I pay $600 to $800 to $1,000 in your house, I'm saving $600-800 a month. That's value to the member. He provides a good experience, and that's how he builds his portfolio because he respects the revenue. And Chris and Pat and I were talking about this. Like, my biggest failure, our platform's biggest failure, is that we don't tell people it's an operating business. And I know I've had many conversations with Ronnie around the same thing. It's like the property acquisition is just to the first checkpoint. You have to understand and get comfortable with the operating model because that's how you make your money. Like, we have a lot of hosts that get upset and mad. They're like, oh, your sales guy told me it would take care of itself. And I'm like, you should punch the sales guy in the face. Like, the reality is, if treat it like a laundromat. And this is the best analogy. Laundromat is a real estate play. But if you don't know how to operate a laundromat, you're going to lose money, right? Like, if you don't keep the lints clean, you don't keep the machines working, you're going to lose money. Same thing is in our world. Your asset is the rentable room and the experience that's in the house. If you focus on that and reverse engineer how many rooms, fit the model that you want, you're going to kill it because essentially the math is just math. But if you're going to be a passive landlord and you're going to treat it and you don't have respect for the members, they're going to churn, they're going to leave, they're going to crap on your house. Like, it's 6 individual humans, right? If there's no expectations, worst default is you go to the worst default. And then everybody's mad, like, oh, the platform doesn't work. And I'm like, there's 1,200 other people that are slaughtering this. You're just a bad operator. And like, our salespeople would never say that, but I don't get comped on commission. So I'm like, you're a bad operator. Get off my platform. Go do it else because you're making it worse. So just understand that the opportunity exists. It's amazing. Not without headache. Do not get me, wrong. But the juice is worth the squeeze. And because of the way we use single families to get multifamily money, it's accessible for the individual, right? Like, I'm not fighting Tricon and BlackRock to do this model yet, right? They have to wait for what you guys are saying is like the city of Atlanta to say, here's a permit to go do co-living because they have their requirements to the hedge fund. For us, this window is amazing. It's early Airbnb 2017. The early adopters are slaughtering it, right?
Oh,
like, I have guys that own 25, 30 of these. And the funny thing is, the more popular it gets, the more big money wants to come in. So California money's coming in and they're doing 1031 exchanges. They're buying existing pad splits at a cap rate because they're like, hey, I just want to deploy capital and I want immediate return. So now the individual investors that did the sweat equity are selling it at a cap rate of 6 to 8 people in a house. And that's how they're taking their dollars to redeploy and start over again. Because lazy money comes in. Big money, they don't want to deal with big renovations, right? Like, that's how we, in our ecosystem, that's how we make our hay.
And just something I wanted to add, guys, for us that are in the creative side of acquiring real estate. I mean, we're acquiring these properties on average, 10%, but on average, 20, $30,000 of acquisition for the return on your investment. Just something to think about. Like there's so much right now, and I don't know, that may change next year, but right now, guys, there's so much opportunities out there. There's so much opportunities out there. I know a lot of people have a hard time finding it, but I mean, there's so much opportunities out there, guys. It's amazing, and we don't know where it's going to change. Like you said, when big money comes in, when it starts to change, we are still in the beginning stage in the eye of the hurricane when it comes to PadSplit, when it comes to co-living. So just understand that, guys. It's amazing. It's an amazing opportunity. So I just wanted to add that.
I want to bring Heather here because she's saying that her problem is not to acquire. The challenge is making the numbers work and smaller rehab cost. Yeah. Heather, do you want to talk a little bit about it? You're saying you have underwriters, but you guys are not able to find a property?
Our challenge is either we find something that fits with the numbers, but maybe it's from a hedge fund or a corporation that does not want to lower their price to make it work. Like it's just, let's say 50K off, or the rehab is like 80K or higher. So it's like those numbers just aren't in balance of what we have seen.
Are you acquiring it creatively? Are you acquiring it cash, hard money? Like, what is your acquisition strategy?
It would either be through a PML, private money partner, or a hard money lender.
Yeah, so I'm going to address this.
Creative, but more on the MLS as opposed to creative.
Gotcha. So the creative, like I was talking to Ronnie about a deal that I found. It was on MLS. It's a bank REO. For the normal investor, it's not necessarily a great fit. For a PadSplit investor, it is a good fit, right? Because like Airbnb, don't ever go into it with like, I need to make this much money, because then we get in trouble. Like you convert a 4-bedroom that's already relatively renovated into a 6-bedroom. And then when I ask you why you're upset, because your numbers are so bad, or you have so many liens that you need 6 out of 7 bedrooms just to break even. Think about our 1% rule being equivalent to like the 55% rule. If 50% of your doors cover your PITI, then there's enough juice in the squeeze.
I like that.
Right?
I like
so like,
it.
Way to look at
kind of use that as like a benchmark of saying good deal, no deal.
Love it.
The issue, and I've heard this with the creative team, because we have so many people in Vegas and Phoenix, and like that's where the mothership of all creative folks are out there. The problem we run into is, even if you're bragging about a 2.9 FHA loan, right, at a $400,000 house, then you need a PML to take down the loan. So that's a second lien. And then you need another PML. This, like Kevin chose a buddy of mine, and he and I broke this down. I'm like, bro, you don't make any money. You've got like 6 liens on your properties. You own $5 million of liability and no equity. I don't understand the math. So he was like, that's why PadSplit was tough, because I couldn't flip it right into a cash flowing thing, because there's a capital expense to put in walls and furniture and all this other stuff. So when I hear Pace saying like, the fee structure and the rate structure, no, the individual investors were bad. So it's like, the math works, but you have to follow the math. Like in your case, it's almost like straight up wholesaling is easier for our model, because your distressed property with the renovation budget, as long as you understand the financing components of it, of like, all right, I'm going to get a DSCR loan. That's my exit, 30-year, but I have to use market rate rent for my DSCR coverage. Then it's important. And then the other part that's important is like, the ARV of the after renovated value, there has to be enough delta where I'm not leaving a ton of money in there. So like we use cash on cash as a kind of barometer for good deal, bad deal. And it should be 15 to 30% cash on cash is like a targeted number. The deals that I do, I take them down cash, I pay cash, and then I put long-term debt on it, right? So my goal is to limit $25,000, $30,000 left in the deal. From your world, that's a PML that can cover the difference if you wanted to. But like, I'll buy something distressed, put renovation on there, put a 30-year loan, and that MOU, maximum allowable offer, like that's where I have to stay. That means like I'm comfortable. If I'm throwing acronyms out there that are people are looking at me like strange, like just let me know and I'll back up a little bit. But like that's just how I invest. But I have plenty of folks that are entry fees for creative at 25,000, right? Like a lot of the VA people do this, where I'm going to get into a $300,000 house for 20, 25, 30,000 bucks. Okay. That's really less than the 20, 25 I would put down on a traditional buy. So people are excited by that because they have capital to deploy as the end buyer, right? So as long as you're comfortable explaining how myself or Pat as an investor, like, hey, I'll take the creative deal for 25 entry fee, and then I got to put in 25,000 in furniture and walls. I'm 50,000 into what would have been a $450,000 house. If I bought it traditionally, I would have put 85,000 in. So that value works for me, right? So just understanding the mechanism of how you're going to exit your deal, that's kind of the how to play in our ecosystem.
That is so true. Yeah, that's so true. And then what you came up. I know Christian is a master at this here about, not only because I know we talk about a lot of creative, but like what you just said, right, Chris? Like you can buy something with a normal, DSC or not DSC loan, but as a, I know Chris, I don't know, you better explain this to me as a loan officer, but just kind of how to acquire the property. Chris, can you say?
Yeah, what are you talking about
Like what he
exactly?
just said,
Sorry.
right? What he just said about acquiring the property, doing the rehab, force the appreciation, and
Yeah.
return to do a CR loan. Yeah.
I like what I call the flip to PadSplit. That's what we're doing now. We got it from a wholesaler, we got it on a very good price. We intended to get rehab to sell, and then the house was so nice. We did such a great job. We wanted to keep it. That's why we decided to make that into a PadSplit. And of course, we love the cash flow and, like holding properties all day long. So that's why I think rehabbing, get a DSCR, make sure when you underwrite, of course, it's going to underwrite for long term. And then you put the money for rehab, furniture, make sure that you have enough holding costs to get the residents to come in, like the ones that we have in 7 bedrooms. We put all of that in consideration to make sure that we're not going to make any cash flow in maybe probably 8 months. But that's fine because there's people still paying the mortgage for us, we're not losing money and we're getting
it's a hold strategy
and appreciation. Yeah, I mean, it's amazing. I want to do a lot more. And I see exactly what you're saying. It's just like what I think, and I'm gonna say it's not gonna be very popular to a lot of people, a lot of investors. Like they get excited, but they don't want to do the work of learning how to underwrite, run how to understand how to run the numbers. And if they don't know how to run the numbers properly, get help from somebody else, guys. This is and I tell you, I have a lot of passion. I think people should not be doing this just for the money, being these landlords. I've been a landlord for like 20 years. It's never been my thing. I love taking care of my residents. So you got to come from that perspective and screen them well and build something nice. It's hospitality. Like to me, I see a hospitality. If you don't want to go through all of that, this is not for you, but understand the numbers. It's so important. Let me just ask you one thing before we get done. Do you guys, for your boot camp, do you guys underwrite properties live? Quentin.
Bobby, give me 1 sec. Chris, ask the question real quick. What did you ask?
When you guys have the boot camp, right? That's gonna start out in December, the 4-week one. And do you guys have live underwriting, like where you kind of hold people's hands? That would be amazing. You see what I mean? So they see the beginning, like how to run the numbers, how to do all of the stuff.
Chris, I am so sorry. I have a 10 o'clock that I got to run to. They're already on the Zoom. I've put my email and the phone number on there. I'm always available. Please, please, please I'll send you the doc. You already have the boot camp
Yeah, I'm
registration?
putting right here. I've just
Okay.
done. I'm gonna have them, and once they do the registration, I'll get all the information. I'll make sure, everybody here is taken care of. And
Thank you,
I
Chris.
mean, thank you so much. It's
I'll
been
talk to you guys
amazing,
soon.
the
Thank
Bye,
you.
best.
Ronnie.
Thank you, Quentin. Thank you.
Bye-bye.
Quentin.
Thank you, guys. Thank you. Guys, that was amazing.
Oh, it's another perspective, right? Is the operator side. I love it, learning
Yeah.
all of this, It's so good. Did you guys like it? Like, should we bring him back again?
Yeah, I really enjoyed it. This is Crystal. I was surprised. I had read, their site maybe about a year ago. I thought they actually provide property management, the property management piece too. So he clarified a couple times we're a digital marketplace. So that was that was good to know as
Yeah,
well.
Crystal, let me
So
clear that up for you. They used
okay.
to have one that they recommend, which is called Two Keys, but they had such a huge problem with Two Keys being a slumlord.
Oh,
Yeah. So
okay.
they manage a little bit, but they don't manage like property management.
Okay, yeah, and I was gonna ask him too, like, did he have one that he recommended? And it sounds like they might want to stay out of that business of even recommending, but
Yeah.
yeah. Okay, thank
Yeah.
you.
And that's why they're trying to clean it up now and don't just like put 10 bedrooms in there and you're like in a rat's maze, just like everything is so teeny tiny. That's why they're trying to clean it up. So to get the people out who just want the landlords out who just want it for money, money, money.
Gotcha.
Because it
All
was
right.
starting to give them a bad reputation, and that's not what they want.
I see.
Yeah.
Thank you.
Yes, I love it. The more I understand PadSplit, the more I like it. Donna, what questions do you have?
Hey, so you guys were talking about the funding on it. You were saying rehab, then get a DSCR loan, but I guess I'm confused because
Oh,
with DSCR loan, you can't get that if they see that you have a pad split. Like, how does that work?
yeah, no. So what we do, because we flip houses too. So I'll
Okay.
say, because I just had my first PadSplit going live a few weeks ago, but the intention for that property was to rehab, to flip, and to sell, right? So we got a hard money lender, your private money lender, whatever it is. We did all of the rehab, everything else, put on the market with
Oh,
the
I saw
intention to
that
flip
video.
it. And then it
Yeah.
did not sell for the price that we want. It's such a beautiful property. And I was talking with another real estate investors, people that have been doing PadSplit and being very successful, said, let's turn that property into a PadSplit. So she went there, she helped me out, figure out rooms and all of that pricing. And I'm like, okay, let's do this. So from that, we decided to get a refinance, cash out refi. So all the rent, the long-term rent qualify for the DSCR. So we just went in there and we got some money back to help us with the furniture and, for some holding costs until we get all of the rooms filled up. So for us, like, I think this is the best strategy if you're able to do all of that, right? You buy from a wholesalers, distressed property, go in there, make it better, force appreciation, and then you go to a DSCR lender. That's the way, that's the model, one of the models that we like. And we're looking to buying creatively and see how we can get into a sub-2, anything seller finance, and then make that into a PadSplit. But
Okay,
that would be a different structure.
so once you rehab, you're rehabbing it just enough to get the DSCR loan, and then after you get the DSCR loan, that's when you add the rooms?
Yes.
Okay.
So
Gotcha.
yeah, we don't say anything about PadSplit,
Right.
nothing about
Okay.
renting by the rooms. Now, there's a lot of people that did that, and then, because they've been doing PadSplit for a while, now they refine their property with 7 rooms, right?
Mm-hmm.
But you're still able to do it. You don't need to tell them, hey, I'm renting this by the room. Have them go in there and then say, hey, this is just extra, this is an office. As long, some investors, they keep the door, they don't put any doors, so they don't think it's rooms. So, it looks weird, but they're able sometimes even to get all of the rooms into the appraisal. So there's several ways that, you know, we can have another meeting next time and then go over the funding, but I think once you understand the numbers, you understand where, you know, what type of PadSplit, because my type of PadSplit, this first one that I put in there, I want to get a higher weekly. That's what I'm shooting for. I'm going, if around my area is like 195, 295, I'm starting at 300. So I'm trying this new model, and in my underwriting, I'm making sure that I have enough time for holding cost if something happens. But I've already got 3 residents there. They've already paying for all my mortgage, because it's about, you know, 250, 300 a room, and I have one for 375. So it's just like a different model. Like if I get 4 people there, I'm good the next 2 months. And then if I don't get anybody until 4 months, but it's the model that I want to have. I want to like, you know, like for the screening process, we get on the phone, we make sure they're going to be, you know, like they understand they're going to be with other people in the room, make sure they rent by the room before. So there's a lot of questions, because it's work, it's a business, you know, this is our property. We want to make sure that we get the best people that are going to understand, and the way that we treat them too. Like our properties has a freaking dishwasher. Our properties, we leave toilet paper, we leave paper towel, we make sure that we take care of them. You know, because I come from Airbnb hospitality, and I know how important it is I have a cabin in LJ now, the only one that I have. I love it. I go there with my family, and I also put on Airbnb. So everything people go in there is what my family gets to experience. So I have like books, I have like little areas, I have like yoga mats. So people go in there like, wow, this is really nice. So you end up attracting those kind of, you know, so I'm getting the same, that's the vision that I had for my PadSplit. And, you know, and see how it's going to go. And so far, it's amazing. I love it. I think not a lot of people know, guys, I can go on and on and on. I love it. But the idea for me, I have 2 rentals. I live in Virginia Highlands. I have 2 rentals down the street that I've acquired in the last 15 years. And all of this rental in the last 2 years, I had 3 guys in each property. One of them, one guy left, another one came in. So I'm doing co-living in a Class A, you know, neighborhood. And I have one person, that's the way for me organically. I said, okay, you 3 can move in. I screen everything. I make sure everything is good. I do my own thing. I use my VA just to help me with some stuff. But I'm like, I'm already doing co-living. I have one guy responsible, and they love it. But guess what? They call me and say, or text me, hey, there's some issue with this, there's some issue with that. I'm getting my guys there the next day. I'll take care of them, because that's what I wanted them to renew their lease, and they pay on time. If they forget to pay, they get a $200, you know, late fee. So like, there's a lot of stuff that I do, but they value, like I come around, they all love to see me. They love to see how I take care of my properties. Those are my properties. So my point is, I've been doing co-living for a while in a nicer neighborhood. I want to do the same thing in other neighborhoods and see how it's going to go, because there's a lot of guys, a lot of girls that they want to live together. They cannot afford, you know, whatever. So I want to get to that people. I want to target those people to come in and feel like, okay, I have something nice. I have a dishwasher. I have this. I have that. I have pictures on the wall, you know. And Quentin said, oh, the people think Atlanta is saturated. Yeah, it's saturated freaking dorms. There are dorms all over. Oh, look at the picture, guys. You look at my property. No, I even have pet. What did you say that I'm not Airbnb? What did I put in there?
So I don't know, fancy stuff. Oh my God, you're way too fancy.
But it's not. It's like $60. You know, like for what is this? Air fryer.
Air fryer, yes, an air fryer.
And then I get a match, you know, coffee maker that's gonna be blue and blue. Like people come in and like it shows the care. And people tend to respond better. You tend to attract better residents.
Y'all, I'm gonna be like,
yes.
Y'all. She puts toilet paper for them. Toilet paper.
I don't want them fighting over that, you know. And another thing that I learned for you guys too, that we're doing that for our PadSplit, is we putting keypad code, how you call it, Pat?
Yes. A keypad doorknob.
Yeah, for the shared bathrooms, because people now, some of the residents that say, oh, they are using my, because sometimes, human beings, if they're in the kitchen, there's an easier, closer bathroom to them, they're gonna use that one. And then people are like, oh, yeah, it's not your bathroom. I'm here. I'm keeping the space clean. So to avoid that, this is the bathroom that you use. This is your code. This is the bathroom that you use. This is your code.
It has a lock, y'all. It has a lock. I'm gonna pee in my pants because I can't figure out the lock. I'm teasing with you, Chris. Guys, no, just Chris, where is that? I was trying to find the email. Where is that 3D of the actual PadSplit? That would be so awesome to show. Can you email it to me? Can you find an email to me?
What are you talking about?
You know the pictures for the PadSplit and you had the 3D model?
Yes.
Where is it? Can
Yeah,
you
for the floor plan, with the floor plan.
Yes, can you email it to me and I can show them? That would be awesome.
You want to show now?
Yeah,
okay.
That would be so cool to show.
Oh, somebody has a question.
Bill and Ben.
Bill and Ben. They're new here.
Yay.
Welcome.
Hey, everybody.
Guys, welcome.
Hey.
Woo.
Yeah, we're sub tours, new since July. We know Josh, I think he's on the call. Anyway, my question is, in looking at that, one of the first slides, it looked like it was all bedrooms and kitchen plus the bathrooms. But in these pad splits, don't they leave a space where the tenants can be social and watch TV or something?
It's the opposite. Is it Bill or Ben?
This is Bill.
This is Bill. Bill. Okay. Hey, Bill. Hey, Bill. I'm Pat. Nice to meet you. So yeah, no, it's actually different. So actually the model, and I thought about that too. That was the first thing that I was talking about. You don't want people to congregate. You don't want them to get into a fight. You don't want them to get into an argument. So it's just the kitchen space. That's a shared space. And the motto is for them to go to their room, stay in their room, go to work. And it's not a congregation. It's not a party. It's not where people get together. When you have that, it has a higher volume of arguments.
Yeah, I think PadSplit, that's the way they did their model in the beginning, but it does not stop you from having a living room. Like I have investors that have living rooms, but can I tell you, nobody uses the living room. It's so funny, just like that empty space. You know those houses that you come in and then there's a high ceiling all the way up. So there's no way, unless you put a roof, right, a ceiling there to build more rooms, that area is open. Nobody uses it. I ask people, like, you did it on purpose. Like, Chris, people don't use it, even though they did it for people to congregate, But on the other side, I have people that they do every quarter, they offer pizza for their residents, and they seem to enjoy each other and stay for a longer time. So I think it's everything like how you feel, how it's going to work for you. I don't think PadSplit dictates us to do this or that. So, you can do whatever. Like I am a visionary. I want to do what other people are not doing. Like I'm going to do a lot more than only what PadSplit's doing. I'm going to bring the residents from outside too. So, there's a lot of stuff that we can do that. It's nice to have a platform that, they're out there and people know them. So, but
that makes total sense.
You can do whatever, you can do whatever. As long as you don't do, too many bedrooms and share bathrooms. There's 4-to-1. So there's certain things that they are very particular about it, safety and all of that stuff. But everything else, you make it your own,
Sounds good. Appreciate the answer.
But it's a lot of creativity. I just want to just mention that again, because creativity is so important, because there, like Chris said, like the other model of acquiring property is like you get a distressed property, you rehab it, you force that appreciation, then you do a DSCR loan, and then you can, pull your money back out, but then you can turn around and you can rent that out and add the value. But you understand the little bitty steps, right? Like when you do your DSCR loan, you don't put up, 3 additional rooms, you wait. And that's the creativity that kind of pop in, that people have to kind of understand. It's the same way as like, I think I saw in the comment there, you guys are real estate agents, right? Unicorn agents, because we don't like normal agents, we like unicorn agents. No, but just like when we get these properties, we got to be creative about it, because like, for example, like I started out buying homes as a home that I live in as a residential home, right? Like as a permanent resident home. And then a year later, I'm renting it out as a renter, and I'm going on and looking for the next one as another permanent home. Is that the way it's, what they say on paper? No, that's a creative way of doing it. It's like, hey, I need a permanent home to live in. I don't really need it, but if I don't use it, I lose it. So every 2 years, I buy a permanent home to live in. Do I ever step my foot into these homes? No, I rent it out the second I get it, but I don't say nothing. But that's being creative, being creative.
Got it.
So those are the things, some little things. And I know someone else had talked about Cobb County. So I actually bought a sub-2 creative deal in Cobb County, wanting to pad split it or wanting to do co-living with it, and I couldn't because I had a very bad neighbor. It was a lot of rooms, like 14 rooms. They had a lot of so it happens. But at the same time, I know tons of people in Cobb County that does PadSplit, and they're completely fine because they don't have the neighbors to call on it. I mean, on the county and the policies that it says, yeah, it says you can only have one other non-family member to live in that house. But again, it's risk. There are certain things, but we have to be creative. We are a creative group.
Hey, when's the next in-person meetup for the Atlanta group?
So we had one last night, and the ones that Chris and I host, we're gonna do it. Chris, I think we're gonna do it in January.
January. We
When
started,
Pace
yeah.
comes. Yes, so Pace is gonna be here in January. So we will do one in January, and I think we're working on in December possibility like a community hike. And it's just with the holidays being so busy, I think we're not having anything, like a meetup. We're gonna try to do a hike in December, and we're gonna do a live meetup when Pace is in town.
Will that be on the sub-2 calendar, or how do we stay updated on that?
We have a website. We have a community website. It's called Subject to. It's called Atlanta Subject to Community, and on Facebook. So join that, and the majority of our updates are going to be on the Atlanta Subject to Community Facebook group.
Thank you.
No, thank you. Nice to meet you guys.
Nice to meet you.
Guys, so information about the PadSplit. Pat, I emailed you what you needed. So the information, more information, detailed information about the boot camp for the PadSplit, I'm gonna email to you guys shortly. I just didn't have time because we kind of did this, like we were talking yesterday, and we got Quentin here. So, but I'll email you guys, everything that you guys, all the information that you need, then you can email me back with any questions. And Pat was talking about, we used to have person meetups for like until probably this summer, and then in our restaurant, we sold the restaurant, and and then we kind of took a break from offering. But that's my goal for next year, is to bring it back again once a month. But we do have meetups, I think I don't know, maybe you guys can help for the new people. For Aries is on can anybody help me here? Ronnie?
Third Thursday.
Yeah. Where's my people? Come on, help me out.
And he has a money meetup for Gators and Sub-2 and everyone on the first Sunday of every month.
Correct.
And then on the third Thursday, he has the meetup. It's usually at Bury the Hatchet. That was last night. We had one last night. That happens on the third Thursday.
Thursday.
Yes.
Mhm.
That's in Roswell.
Okay,
But there is a number that you can text to, I just don't know it. And you can get like a text blast of every single meetup that we have, including this, I think.
Yep. I don't have the number either.
Yeah, I don't have it either. Chris, I wanted you to send me the 3D model, not the JPEG model. There was a 3D model. I think it's a link. It's a website link.
So
You sent me just a JPEG.
Mm.
But I can show it real quick here. Let me see if I can show the screen here. Share screen. Yeah, send it to me and I'll kind of show it. But let's see if this works. It's an email link. All right, let me show you this. If anybody can see it, can you guys see it?
No. Yes. I thought you were talking about that. No.
Yeah, but there's one that's a 3D model. You can do actual walkthrough.
I thought this is a 3D model.
No, this is just a JPEG.
Oh, so that's inside PadSplit.
No, it's not PadSplit. No, it's inside the guy that did it. It's he had there's a separate,
Okay.
yeah, it's a 3D model. So if you guys can see it here, I know this is just a picture, a JPEG there, but let me see if I can kind of show it.
House.
So if you walk in, this is the front of the house. This is the house that we remodeled. It's a very nice house.
So it's 7 bedrooms. So we went from 5 and 3 to 7 and 3, right, Pat? Or
That's
4?
correct, yes.
No, 4 and 3.
4 and 3, yes.
To 7 and 3.
So the original, if you look here, this is the original room right here of the house. As you can see, it's already got all the pictures. Chris, in the meantime, can you find that link and we could do like a 3D walkthrough? That would be pretty awesome if we have that.
Yes, I'm
So
trying.
this is the original room. This in the middle here is the bathroom, the original bathroom there, right? So it's remodeled, and this is the second original room. So it was a two house originally. The original house was a 2-2. And we did a lot of different conversions. So this space here, if you can see my mouse, this was the living room space, right? So what we did was, after we've already remodeled, we put it on the market. We decided we're going to keep it as a long-term rental for PadSplit. We added 1 room, 2 rooms there. So we added those 2 rooms, and we basically just put a wall up here, and pushed this wall back. And then there's a sunroom in here, and this is a sunroom. So the sunroom, whoever's renting out this room, they have a separate living quarter in the sunroom. And you see that's their closet space there. So even though this is a tiny, tiny bedroom where all you can fit is a queen bed, they have an actual separate living quarters. So we charge them the same. Instead of discounting the charge, we actually charge them a little bit more for that space. When it comes to PadSplit and co-living, little things that you can do to make a difference, you can upcharge it. And the little upcharge goes a long way. Like, for example, if you have a fan in the room, it goes a long way. If you have a mini refrigerator, it goes a long way. And there's certain companies where, certain things that they will not allow, like property management companies, things like that. Because, like, for example, if you put a fridge in there, if people are slobs, they're going to leave dirty, smelly food in there, and you can't really have access to their room until they move out. So those are little things that some companies were not allowed. So I want to just give you guys a tour here. Chris, have you found that 3D model yet?
No.
Okay. So as you come out here, this is the living space here. There's like a little foyer space, and then you come out to the kitchen, and then the dining room is here. I can't show you guys because it doesn't show. But so we close out the living space, and their living space is large enough. This is what they have to live off of here, like in terms of the common area, right? But it's a big space. So this particular room here is the only room that has what they call the in-suite, which is basically the bathrooms. And as you come down, I'm going to show you here. This space, all this side right here, guys, was a carport. Okay.
Did you add a bathroom or 2?
We did. So when we remodeled it, we made it to we made it to a 4-bath, 3-bathroom.
But that's when we rehabbed was 4 and 3, and then once we decided to do PadSplit, we built 3 rooms.
So it was originally 2-1, and then you changed it to a 4-3.
That's correct.
Yes,
That's correct.
That's to sell, to flip, and then we decided to keep it to PadSplit, and then went from 4 to 7 rooms.
Because when you flip properties, on a different note, when you flip properties, you always want to add square footage. You always want to add square footage. So this particular one here on this side of the house here, this whole side that I'm circling here, guys, that is a carport. But whoever remodeled it for us, they already closed in the carport. I just made it better, right? They already closed it in already, so I didn't have to get any permits to say, oh, let me add additional space. They already closed it in. So we made it better. So we added 1 room, we added 2 room, and we added a bathroom. That was the original space there. And this was a common area space right here, was like a little dining room, whatever space you want to use it. We actually closed that one in, and behind that is a deck that they would have the space. So we added 3 additional rooms for PadSplit. From a 4-3 to a 7-4-3.
I got a question for you about the 2 rooms you put in over here next to the entry door. The one that goes out to the porch?
Yes.
What size are those 2 rooms that you added?
The original 2 rooms that we added before PadSplit was I think I want to say it's like an 8-10, 8 by 10.
Okay.
Yeah, so they're good sizes. The second one right here that we added, it's an 8 by like.
No, I don't think that's the one Heather is talking about. She's talking about the other 2 that go the one that has the extended like office.
Right here, this one?
Right.
This
Yeah.
right here?
Yes.
So this is a, I don't remember the numbers, guys, but I think I want to say it's like this one's an 8 by 10 or 8 by 9. And then
Okay.
this here is a 8 by, I don't know.
You know what we do, Pat? Next time we show our ad on PadSplit, show the pictures if you guys
Yeah.
want to see everything. Because what was very interesting, because Pat walked the property with our our crew,
Yeah, crew, yeah.
and then you guys, I mean, it was amazing because I came with with one person that told me, "Hey, let's do this, let's do that," which was amazing. And then between Pat and his contracted, we decided to add one more bedroom by making this huge bedroom that we had a little bit smaller. It's still huge, trust me. And we put this hallway, such a beautiful hallway. It looks so nice. It's not like a small hallway. It's a nice size hallway. And that created the whole flow to go to the first bedroom that we created, a second bedroom with a sunroom as a bonus room. And then on the other side, we have the big room that got a little bit smaller, but it's still huge. And then we have the bathrooms and the other rooms, and then more rooms on the other side. But we can show, like whatever. The house, I think the way that we divide everything up was really smart.
Can I ask you a quick
Yes. No, go ahead, Karen.
So you might have said it and I missed it. So what was your original square footage and what was your completed square footage that you just, it was already enclosed square footage that you just remodeled things inside? So you didn't.
Before the rehab, Pat, how much? And we still have a basement there, guys. It's unfinished that I want to do something to that basement later. Yeah, just need to stabilize the property. What was it before?
So the original house was I think it was a 2000, like it was like 2,100 square foot house, right? That's the way they sold it, right? That they sold that because they already, I mean, it was in an older neighborhood, and a lot of these homes are just basic ranch style homes, and the homes had a carport and a sunroom. So the original owners have already enclosed the sunroom. They already enclosed the porch. And in DeKalb County, it is what it is. It was on record, so we're like, okay, let's just take it. So, but it was a carport. And every time for us, on the opposite note, when we flip or renovate homes, we always look for square footage. For those of you that are real estate agents, Bill and Ben, we always add square footage, whether we find it in a garage, whether we find it in a sunroom, or whether we find it in an attic space, right? We always add square footage. So that's our play. That's how we invest in homes. And it's very different. And I want to go back on Chris's side as a loan officer there. It's like there's so many little bitty things that you just don't think about as an investor. You're like, okay, if you rehab this property, this is what's on record, right? This is what's on record. But at the same time, you're like, can I actually get will my mortgage company, will they accept it? Well, there's so many mortgage companies out there. So one may not accept it, the other ones will. One would say, hey, you need a permit for this. Other ones would say, hey, this looks great. Let's just do it. So you got to understand those little bitty things and really have enough experience to understand it, to kind of get away with it. That's the best way I can say it, right? Because at the end of the day, the same way we buy homes, like creatively, when someone buys a house and you sell a house and you say this is as is, they could care less if that house is either permitted or that's what the county record said. It does matter. It's a huge factor that you got to think about. But if someone wants a house and they like it, they're going to buy it for the price they're going to buy it for. So those are the little things that we have to think about. But there's so many. I mean, we can't say it. It's a long list of things, but you got to understand real estate. You got to understand the creative side of it, and the gray tapes and the gray areas that you can get away with.
Well, so my second part of that question was, if you guys are willing to share, did you have this finance like as a fix and flip? So did you have a fix and flip loan?
So this one here, this was
PML. No, we did PML, Pat.
Yeah, sorry, yeah. Private money. It was a private money. It was private money that was borrowed to fix and flip the property, right? And then after that, it was converted to a DSCR loan.
Okay, but so had you already converted it before you did the PadSplit conversion?
Yes.
That's correct.
Okay, so if you don't mind sharing, how much more did you have to reinvest into it? And then how did you handle that part of it? Do you know what I mean? Like,
so Go ahead.
I mean, we can do the numbers, you know, I have all the numbers in my spreadsheet, but we got a cash out refi, and because we forced appreciation, we had some money left over.
Oh,
That
good.
money we use into holding cost, and because again, you make money on acquisition. So we bought the property really well. So we're able to make, you know, pay for the rehab, pay for the PML and everything, and still have 30,000 left over.
Okay.
So it was
After all of-
amazing after everything.
Oh,
Yes.
wow.
And
Awesome.
appreciated really well, which was amazing. Like I think everything was, you know, was great, more than we expect. So
Like Carrie, to answer your question, it's sometimes you don't know, right? Like sometimes it's the budget you just don't understand, right? So like I have, because I've my crew from the construction side, like I'm able to get the cost down, right? Like something that this particular house, I think it cost like 100K to rehab it. Like it was a lot of money to rehab it, right? If even over, I would say. But
But that's a lot of rehab. You
it
mean
is a lot of rehab.
after the PadSplit rehab, or just okay?
It is a lot of rehab. But I think where I think Heather was the one that said, like, you know, big companies would come in, and big companies would come in, and big companies would just, from a rehab standpoint, they give you such a high number that it doesn't work, right? It doesn't work.
Yeah.
But for us, because we have our own construction team, like it's completely different. We're able to keep the cost down and still make it effective.
Yeah.
Yeah. So it's a big difference. I mean, it's just, if you understand how to force appreciate a property, I think it goes a long way, right? Those are the stuff where I think a lot of questions that some people will have in terms of, like, how do I make these numbers work? Like, you just got to understand. It's really, it's something for me personally. I think that a spreadsheet cannot tell you. You have to learn with experience. You know, you have to learn the little things that you can kind of get away with. And there's so many little things. And the best way to learn it is to, you know, JV with somebody, to get with somebody who has done it a little bit, so you can see the little things, because that spreadsheet will not tell you those things. What can you skip? What can you get
do
away
what
with?
we did, Pat. We just said, let's do it. And we learned from it. And we're still learning from it. And but it's amazing how good we've gotten.
Yeah.
Like, it's amazing. You don't realize it until, like, wow, now we're doing a bigger project over in Milton, Woodstock area. We're like, wow, everything that we learned, we're able to carry on. Because fix and flip, it's about rehab, right? It's about time, have the timeline completed, stay on budget. So it's that dance, and you gotta fine tuning to the dance. And we've been doing it, you know, like it's been great. We love it.
Absolutely.
But I think, Kara, I think right now is the time. I think it's the time to buy now. Like, I keep saying that to everyone, but I think right now is the time to buy. You got to buy now, buy now, buy now. It's so much deals and so much opportunities, because it will change. It will come back up. I could, and I don't know, right? We don't know what the comments going, but I say we're at the bottom of the bottom. It can only go up now. It can't go any lower. And I say that with knock on wood, I don't know, but it can't go any lower. You know, there's a lot of optimism. You know, the president. We know who the president's going to be. You know, the new year is going to come along. It's going to have to come back up. And now that the government understands that, they're going to lower the interest rates. They're going to do this stuff, and it's going people. I think in the past 6 months, people who have money have been holding their money, and I think they're going to have to start spending, because you can't keep holding on the money. You got to move your money. So I think that's where the opportunity is going to come in. I think there's tons and tons of opportunity. I think a lot of us, I think the mindset is there's just fear and not knowing when to jump into the market, you know? Like, you know, that saying that say the best time to plant a tree was 20 years ago. The second best time to plant the tree is now.
Yeah. Exactly.
Okay. All right, we gotta go, guys. So Pat, we're not hosting next Friday, right?
Yes, it's Christmas, guys. I mean, not Christmas, Thanksgiving. Yes.
Yes, guys. You guys have a great Thanksgiving. I put in there, excuse me, the form to fill out if you guys want to do the goal setting, and I did another one for the boot camp. So, and if you guys have any questions, email me. I put a link in there, text me, and have a wonderful weekend. Enjoy your family, friends, or yourself, whatever you guys are doing next week for Thanksgiving.
Guys, thank you so much, guys. Happy holidays. Carrie,
I'll see you guys the following Friday.
Carrie, I know that he didn't say much, but I still think Savannah is a missing market when it comes to PadSplit. It's a missing market. I think you got to be the first one to start it.
Who's coming?
All right, guys. Have a
Bye,
happy weekend in
guys.
Atlanta and the South. Thank you, guys.
Yes, see ya. Thank you.
Bye.
Bye, y'all. Have a great